Welcome back to Financial Market Insights for Traders. I'm your host, Sophia, and today we're diving into one of the most transformative shifts happening right now in global finance, Nasdaq going 24/7. That's right. The world's second largest stock exchange is now open around the clock, following in the footsteps of crypto markets and forever changing how we trade. This isn't just a tech update or an operational tweak. This is the beginning of a new trading era. Whether you're managing a hedge fund, day trading from home, or building a diversified long-term portfolio, you need to understand what this means and how to trade it. Let's break it down. Why Nasdaq going 24/7 actually matters. Crypto did it first. Forex markets, to a degree, already operate around the clock. But traditional stock markets? They've been stuck in a rigid window, 9:30 a.m. to 4 p.m. Eastern. Nasdaq's move to continuous trading means that window just got shattered. This shift addresses one of the market's longest-standing inefficiencies. What happens between the closing bell and the next day's open? In that dead zone, earnings drop, wars begin, central banks pivot, and the markets can't react in real time. But now, that lag is gone. Who benefits first? Global traders. If you've ever tried to trade U.S. equities from Asia or Europe, you've likely had to either stay up late or wake up early, and that's not sustainable. Now, with 24/7 Nasdaq access, traders in Tokyo, London, or Johannesburg can operate on their own schedule, not Wall Street's. It's also a win for anyone running after-hour strategies or tracking macro events across time zones. Economic data doesn't sleep, and now the markets don't either. What changes for market dynamics? Let's talk mechanics. Here are the top implications of Nasdaq's move. 1. More efficient price discovery. When news breaks overnight, markets can now react in real time. That means fewer price gaps between close and open, more accurate valuations as global events unfold, less reliance on futures for overnight sentiment. Price action will now reflect the entire global news cycle, not just U.S. business hours. 2. Higher liquidity around the clock. In theory, 24/7 trading boosts total liquidity and narrows spreads. That's a win for everyone from scalpers to pension funds. The reality? Liquidity will still be lower during off-peak hours at first. But as adoption grows, expect deeper books and tighter spreads even at 3 a.m. This could significantly reduce slippage and improve execution, especially for CFD traders and those using high-volume strategies. What's the catch? No move this big comes without friction. Here are the risks and challenges to watch. Operational costs. Brokerages, clearinghouses, and market makers will need to adapt. That means staffing overnight shifts, expanding tech infrastructure, and securing compliance teams across time zones. Regulatory oversight. Expect the SEC and other regulators to weigh in. Continuous trading introduces complexity in surveillance, insider trading detection, and systemic risk management. Mental and emotional fatigue. Traders already fight burnout under normal hours. A 24/7 market could tempt traders to overextend themselves. Discipline and routine will matter more than ever. High frequency and algo traders, this is your playground. Make no mistake, algorithmic traders are going to dominate this new time horizon early on. More hours equals more data equals more opportunities for statistical arbitrage, mean reversion, and machine learning strategies. For high-frequency traders, this move is gold. But it also raises the bar. If you're not automating your edge, you risk getting left behind. What does this mean for retail traders? Here's the good news. Retail traders now have more flexibility. You can trade at night. You can trade on weekends. You don't need to be glued to the screen from 9:30 to 4 anymore. Platforms that offer contract for difference CFD trading, like crystalballmarkets.com, are positioned perfectly for this. With CFDs, you can speculate on Nasdaq-listed stocks with leverage, go long or short, and trade on your terms. More access, more control, and if you're disciplined, more opportunity. How to position yourself for 24/7 trading. Let's get tactical. Here's how to adjust. Update your strategy for volatility and volume cycles. Expect lower volume during new off hours. Use volatility filters and only engage during your optimal windows. Avoid assuming liquidity will always be there. It'll ramp up slowly. Use tools that work around the clock. You'll need real-time news alerts, automated trading software, advanced charting tools that work outside normal session data. Get serious about risk management. Stop losses are non-negotiable in 24/7 markets. Watch for spreads widening during thin hours. Use alerts and limits to automate protection while you sleep. Choose the right broker. You need a platform built for this shift. Crystalballmarkets.com offers CFD access to Nasdaq assets, 24/7 availability, leverage for dynamic strategies, no bloat, no delay, no fluff. It's built for traders who want flexibility without compromise. Final word, this is the future. Adapt or fall behind. Nasdaq going 24/7 isn't a novelty. It's a structural evolution. And just like crypto reshaped trading norms in the last decade, this move marks the start of a broader shift in equity markets. The takeaway? Start adapting now. Build strategies that don't rely on static hours. Test your approach during new volatility windows. Automate where you can. And above all, trade with intention. If you want a flexible, high-performance way to take advantage of this new market dynamic, CFD trading at crystalballmarkets.com gives you the tools to stay ahead. That's all for this episode of Financial Market Insights for Traders. I'm Sophia, and the clock doesn't stop anymore. Neither should your edge. Until next time, stay sharp and trade smart.